Well, friends, good morning. Jagender Rana here. I'll discuss today the importance of RegTech for FinTech and InsureTech. This is a very interesting topic. Importance of RegTech for FinTech and InsureTech. The term RegTech is formed using the combination of the words regulatory technology. It refers to the use of any modern technology such as software or cloud-based solutions which are used by financial institutions for better compliance with regulatory requirements. So RegTech is a recent concept in the Indian FinTech and InsureTech industry. So the FinTech and the InsureTech industry is quite dynamic, and with the ever-changing regulatory landscape, it can be challenging for financial institutions, including insurance, to keep up with the latest regulations. RegTech is the management of regulatory processes within the financial industry. The main functions of RegTech include regulatory monitoring, reporting, and compliance. It consists of a group of companies that help business comply with regulations efficiently and less expensively. So RegTech, that is regulatory technology, is a class of software applications for managing regulatory compliance. Companies invest in RegTech as a way to save time and money, allowing resources that were once devoted to regulatory compliance to be diverted elsewhere once RegTech takes over those functionalities. So RegTech tools monitor online transactions that take place in real time to identify irregularities or issues in the digital payment sphere. Any outlier is sent to the FinTech company to analyze if fraudulent activity is taking place. Now, functions of RegTech in financial sector. The RegTech compliance used technology to automate compliance processes such as customer due diligence, risk assessment, and transaction monitoring, which helps financial institutions to detect suspicious activities and prevent financial crimes. So a RegTech firm can combine complex information from a bank with data from previous regulatory failures to predict potential risk areas that the bank should focus on. So by creating the analytics tool needed for these banks to successfully comply with the regulatory body, the RegTech firm saves the bank time and money. Now, one of the main objectives of the RegTech industry is to provide technology driven solutions to compliance challenges. This includes conducting in-house compliance processes, audits, and risk workflows in real time. So the RegTech solutions can help financial institutions stay up to date with changing regulations and avoid fines and other penalties for non-compliance. So they can also reduce the cost and complexities of compliance and free up resources for other business activities. Now see the tools of functioning for RegTech companies. Because RegTech companies are now engaging machine learning, natural language processing, blockchain, artificial intelligence, and other technologies in order to bring the power of digital transformation to the world of regulatory compliance. So RegTech tools monitor online transactions that take place in real time to identify irregularities or issues in the digital payment sphere. Any outlier is sent to the FinTech company to analyze if fraudulent activity is taking place. So RegTech uses new technologies such as artificial intelligence, machine learning, and robotic process automation, among others. So, to simplify regulatory reporting, management, and compliance, it offers numerous benefits both for regulators and regulated entities. So, while a single piece of technology often overlaps into different areas, there are generally six different categories of technology: communication, electrical energy, manufacturing, medical, and transportation. So, RegTech allows insurance compliance professionals to work over and around legacy infrastructure impediments to connect and analyze information more smartly in order to understand where the organization may have risks and exposures based on a larger data population than was previously accessible. So, RegTech is designed to help firms automate the more routine compliance tasks and reduce operational risk associated with meeting compliance and reporting obligations. So, a perfect example of RegTech is electronic Know Your Customer, means eKYC, process by which banks verify the identities of the people who open new accounts digitally. This KYC process is a major part of the banking. So, a variety of factors has fueled this growth, but the main one is looming regulatory burden. The majority of RegTech compliance work with the clients in the financial services industry. It's the most heavily regulated after all. So, RegTech has the potential to transform the FinTech industry in India by making it more efficient and effective. It can help financial institutions save time and money by automating compliance processes. So, the implementation of RegTech in the FinTech industry in India is still in its early stages. RegTech market is projected to grow at a CAGR of 17.55% during the forecast period 23 to 29. So, the RegTech market is segmented based on component, deployment type, technology applications, and user and region. Risk management solutions enable automated credit assessment to understand optimal exposure and limits, whereas the collaborating with RegTech solutions can deliver cost savings and increase return of capital along with all regulatory and compliance needs. So, the RegTech system in risk management support risk data aggregation for capital planning and liquidity reporting, modeling scenario analysis, and forecasting with stress testing. So, RegTech solutions in the areas of Know Your Customer, real-time AML screening, AI or ML based fraud prevention, and real-time compliance monitoring at the highest level of adoption by banks. Other areas which are generating interest are cloud computing for data standardization, cleansing and provenance audit and board level governance, analytics, dashboard and predictive analytics for advanced risk management, and end-to-end automation regulatory reporting. So, artificial intelligence and machine learning based eKYC, real-time AML, sanctions, screening and compliance monitoring are there. So, Sandbox is a new innovation of the customized reporting platform for firms looking to be compliant with the RBI, SEBI, IRDAI, PF, etc. It also provides access to instant insights based on trading data so that decision makers can make informed data driven decisions and monitor best execution practices. It also serves the purpose to fulfill the long awaiting needs of FIs for data governance, producing, experimenting with and sharing data within small isolated groups before deciding if that external data is worth cleansing and ultimately adopting for use throughout the organization. So a good data governance model enables powerful sandbox analytics. Now sandbox will enable more FinTech and InsureTech experimentation within a well-defined space within all-time regulatory and governance support. So sandbox can help innovators to increase efficiency, manage risk, and reduce go-to-market time within the regulatory framework. So by facilitating protection against regulatory risk, RegTech increases investors' confidence. In case of most RegTech offerings, the usage of automated intelligence to detect red flags and control regulatory reporting has reduced the incidence of manual error, thereby increasing investors' confidence. RegTech or regulatory technology is a class of software application for managing regulatory compliance. Companies invest in RegTech as a way to save time and money, allowing resources that were once devoted to regulatory compliance to be diverted elsewhere. Once RegTech takes over those functionalities in the insurance arena, RegTech is gearing up for providing services in the field of underwriting and risk management, along with the appropriate claims management and reduction of fraud. So this is something which you can presume that there is importance of RegTech for FinTech and InsureTech. So this RegTech, which is known as the regulatory technology, is a class of software applications for managing regulatory compliance. Companies invest in RegTech as a way to save the time and money, allowing resources that were once devoted to regulatory compliance to be diverted elsewhere once RegTechs take over those functionalities. So this is a class of software application for managing regulatory compliance. Companies invest in RegTech as a way to save time and money, allowing resources that were once devoted to regulatory compliance to be diverted elsewhere once RegTech takes over functionalities. RegTech tools monitor online transactions that take place in real time to identify irregularities or issues in the digital payment sphere. Any outlier is sent to the FinTech company to analyze if fraudulent activity is taking place. Thank you. Thank you very much.